Let's bring on board Amit Jatia, who's the Vice Chairman at Westlife Development, to talk about how the numbers have been. What is the current consumer sentiment? Good afternoon, Mr. Jatia, and welcome on board. So let's start and dive right in and talk about, the dine-in opening up space, where we're seeing restaurants also seeing long hours, extended hours. How has the footfall been? What is the consumer sentiment like? How is the demand trend shaping up for you?
Well, I mean, all of that happened in October, but I must say that month on month, we saw pretty good trends from a consumer point of view and from the opening up. So between July, August, and September, by September, pretty much all states had opened up except Maharashtra. And we saw very good traction in September. And, we've sort of isolated our results for September particularly. And we had, pretty much top line restaurant operating margin, operating EBITDA, all came in quite solid.
Surely seeing good traction coming in there. But, Mr. Chata, if you could move forward and, talk about the operating performance, which is been improving since the last quarter. But, now there is a lot of agri-inflation, raw material price also going a bit higher. So, what can we expect in terms of the margins? Can they be staying at these levels, or could we expect some pressure going forward as well in terms of growth, in terms of margins?
I mean, the worst is never over. I think inflation is going to continue to stay strong. But as you would have noticed, last quarter we managed our inflation very well because, you have to fight inflation every day. And it's not, you have to expect inflation every day as well. So essentially, you'll notice that our gross margin improved quite well last quarter. And there is a lot of effort going in managing product mix. So because raw cost is also being difficult, because of inflation, not only are we looking at new ways to keep costs down, but we are also trying to manage it through product mix changes so that we can sell products that are slightly more profitable a bit more to the consumer. So I think the next 3 to 6 months will remain challenging from an inflation point of view, but so far we managed it quite well.
Okay, so having a look at the product mix to manage costs as well and margin pressures. But, if you could highlight upon what is the average order value been like, has we seen a further increase coming in the average order value in quarter two as well?
So we don't share a breakup of our order value, but yes, it has been increasing because, we've noticed that whenever the off-premise business that is consumed outside the restaurant, not in store, increases, average check increases with that. So as off-premise business has been growing, our average check has been growing along with that. Also on delivery, the group sizes are bigger. So the average check is larger. And lastly, having McCafe, which is where the first product starts at 99 rupees. Then recently in South India, we launched the fried chicken. That starts at 99 rupees. And then the gourmet burgers that were more recently launched, that starts at 150, 200 rupees. So clearly consumers really are loving it, and therefore average check continues to rise.
And Mr. Jata, if you could just highlight to us upon, what is the sales contribution coming in from the convenience platforms and how much is dine-in sales as of now? How is the recovery? If you could shine more light on how is the recovery been in dine-in as well?
So dining recovery month on month has been getting better as particularly Maharashtra opened up. So we are almost at 65-70% of the dine-in business recovery. Convenience channels, of course, from a year-on-year basis are about 170, 180%. But even sequentially, it is up about 7 to 8%. So I love it because even sequentially, when last quarter was very strong with convenience and in-store was almost completely shut. So even with in-store coming back to 60-65%, convenience channels have grown sequentially. So that gives me a lot of optimism that convenience is here to stay. And as in-store keeps coming in, that's going to lead to good growth in same-store sales.
And lastly, Mr. Jatia, surely we are seeing a good growth and recovery coming in dine-in and convenience platform. But, what is your expansion strategy? Are you going to be focusing more on tier 2, tier 3 cities furthermore? And, how are you going to be widening your footfall? What is your footprint plan going forward?
Essentially, we are looking at doubling our store base over the next 3 to 5 years. And we are looking at investing between 800 to 1,000 crores to get that going. Our strategy will kind of remain consistent, where about 60-65% of our new restaurants will come in our existing cities, and about 35 to 40% may come into new cities. So yes, there is a small uptake in tier 2, tier 3, because we are seeing very good results come from tier 2, tier 3. So that small shift is coming for us.
Thank you so much, Mr. Jatia, for joining in with us on ET Now. It's always a pleasure having you on this show.